Welcome back. You are watching Stock Watch this week, and join me to unpack your stock-related questions this afternoon is Reddy from All Weather Capital. Do send your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Thank you so much for your time, Chris. Quite a lot of questions that we do have already here, so let's actually get this show on the road there. The first question there we have about Life Healthcare. What's the story with Life Healthcare? It was a stock pick last week. It hasn't recovered since the special dividend as it is hovering in the mid 10 Rand mark. Yesterday I did have a conversation on Netcare, and really there seemed to be a lot of reservations about the healthcare space, where growth is going to be coming from, particularly around the nervousness that we have in terms of the NHI.
Yeah, I think all good questions in terms of what's actually happening in the healthcare sector at the moment. I mean, I think something that we are following quite closely is just what's happening from a flow dynamic in terms of just the foreign selling that we've seen in our market. I mean, the one thing that we watch on a daily basis is just the level of foreign activity in our market. And what we have seen over the past 2 weeks has been foreign selling in our SA domestic name. So the likes of our retailers, our banks, our telcos, and even the healthcare shares. So there has been significant selling down across those sectors. I mean, part of it has been from like a rotational play where they've been selling the domestic names and then buying the resources into this resources rally that we saw. But the other part of it is also linked to uncertainties around just what the election outcome is going to be next month, as well as the actual plan around NHI and how it's going to be funded. So I think a large portion of the pressure on NHI and Life Healthcare and Netcare has been this big foreign selling that we've seen over the past couple of weeks.
Yeah, it's really going to be quite interesting because it seems that investors at this point don't really want to commit to a certain direction until things are certain on that front. Let's go on to more questions. There is a question here on, let me just go on Vodacom. The question goes, what are your views on Vodacom considering the potential settlement with the Please Call Me claimant? I mean, is this something that investors are watching, Chris, or they're also just waiting? Because, I mean, this is an issue that has been going on for years. Of course, we also have these big numbers now on, the potential, amount that Vodacom could pay the Please Call Me guy. But is this something that investors are watching closely at this point?
Yeah, I mean, on Vodacom, I think the general consensus is that the actual settlement amount is not going to be anywhere close to the tens of billions that's been floated around in the media.
Yeah.
So I mean, I think if you just look at expectations, are probably going to be a few hundred million if they do settle around those rates. But I don't think that is the big factor that's actually weighing down on Vodacom. Like I said, similarly with MTN as well, that we've seen with this domestic selling down around the telco sector, I think that's probably what's weighing down on Vodacom. And then some potential uncertainties around just how Egypt and the rest of the Africa operations performs.
Well, there's also been, a lot of news around copper, and particularly as we saw with BHP gunning for Anglo American for their copper assets. But there's also been action going around in the smaller miners, Copper 360 and also Renen Minerals. These are counters that not a lot of investors actually watch. I'm interested to see, because we did have, obviously there are questions here. We did have Copper 360 coming in with their first copper concentrate in the Northern Cape, and then Renen Minerals as well. They're coming out with a higher grade copper intercept. And I'm wondering if this is something that investors are watching closely, even coming from smaller miners.
Yeah. So I must be honest, they're not companies that we typically would target for gaining copper exposure, just given the lack of liquidity in those two names that you just mentioned now, with Copper 360 and Renen. I mean, our preferred play for getting copper exposure has been via Glencore and Anglo American. The reasons being is that we think that these companies are still undervalued, or were still undervalued in the case of Anglo's before the bump yesterday. But I think you've just got optionality around M&A as well coming through in the likes of Glencore and Anglo American. and you've got the liquidity benefit as well, if you do need to trade out of the position.
Yeah. Well, actually, what are you making of the decision that Anglo American has decided on today to reject the offer by BHP? Was this a surprise or something that was expected?
I think it was majority expected by the market. I mean, I think this is just deal negotiation 101. I mean, the buyer comes up with an offer, the guys counter the offer, and then there's going to be tweaks that come through in terms of what the actual structure is going to be. I think if you look at the BHP proposal from yesterday, it was always going to be a challenge in terms of what actually happens with the Kumba and Amplat's positions, because I think as Anglo just put out in the statement overnight, they are concerned about the dynamic around giving those shares or lumping Anglo shareholders with the shares in Kumba and Amplat's. Majority of the issue is that a large portion of the Anglo American shareholder base is based in the UK. These are predominantly SA. These are mainly SA assets in iron ore and flats. And that's, I think, what's led to the big selling that we saw already from Amplat and Kumba yesterday as guys tried to preempt that unbundling of the shares. So I think Amplat was down close to about 11-12% at some stage yesterday.
Yeah.
But I think I mean, how this thing plays out from here. So we saw the response overnight or this morning from Anglo American. BHP still has about a month to go before they formally come back with an actual proposal. In the meantime, I think we are likely to see other bids come through on Anglo American, but any other buyers will probably want to wait and see how this plays out, what BHP actually puts forward in either revised higher price or even some other restructuring, maybe making a bid for the entire company and not actually doing the unbundling in Kumba and Amplat in the initial stage.
All right. There's an interesting question here. What investment would be the best to put in a tax-free savings account? Local top 40, S&P 500, or property index fund?
So when it comes to tax advice, I'm even more limited in what guidance I can give. But I think, I mean, it's going to come down into the individual's tax circumstances, their time horizon, what type of income they'd want to generate from it as well. I mean, we always tell our clients, if you are looking for a long-term investment, equities is typically your best bet to leave it in there, take most advantage of the 25,000 that you get per annum on the tax-free investment saving, and just take advantage of that. I think it's going to have to come down in terms of this, what type of income stream the individual wants from the investment, and are they looking for a blend of income plus capital gains in it as well. I mean, the thing that we are also factoring in also is that the rand at 19 rand, or just under 19 rand to the dollar, is it actually the right time to be investing in offshore assets that are potentially quite stretched, especially from a US point of view? I mean, we still see significant value in the local markets, predominantly in the non-rand hedges right now.
Yeah, that's a very, very interesting one. They are being cognizant of where the rand is right now, and especially, as you mentioned, particularly with where valuations are as well. They're on the S&P 500. There's also another question. The viewer says, mine is somewhat of an unorthodox question, but I'd like to know from your panelist his thoughts on whether this new two-pot system implemented by our National Treasury, where people can get some of their retirement funds back, would increase liquidity on the JSE, with some of that money coming into investments. Is that something you're anticipating?
Yeah, it's a good take on the potential scenario that could play out with the two-pot system. I think if you look internationally, especially in the UK, Australia, and in the US, the retail market is playing a much bigger role in terms of actual trading on the stock exchange. Unfortunately, in South Africa, we don't really have that big a savings culture. So our retail flow in our market is significantly lower relative to some of our international peers. With the two-pot system coming in place, I do think that the viewer is making a good point in terms of more trading coming through in that small to mid-cap space, because I think it is a segment of the market that has been unloved by the larger asset managers. I mean, part of the factors is that it's just lack of liquidity is already a deterrent for the large asset managers to come and invest in the small to mid-cap space. The point that I just raised around the copper question as well is a clear example of where larger managers don't invest in that segment. So I think it is a valid argument to make around greater trade coming through in that small to mid-cap space. And I think, to be honest, I think that is actually where we are finding value in our local markets. And I think you've got to also differentiate between the various shares in that sector. I mean, many of the small to mid caps shares in the JSE are actually managed by very, very strong management teams. Some of them have got good balance sheets. Many of them already have buybacks on the go as well. So you shouldn't just say small to mid cap space, lack of liquidity, then makes it a much more risky investment, which is definitely not the case that we found by being selective in that sector.
All right. I know that a lot of you also are stock pickers, but you do look at some ETFs. There's a question, which ETFs are good to buy for shorter term in South Africa or abroad currently?
That's an interesting question there. I mean, again, I'm going to default to what is the time horizon for the investment, what is the risk return appetite for the investor. I mean, the simple answer is if you're looking to day trade these things and you want high volatility, probably look at our mining sector focused ETFs. You know, I mean, but you're obviously taking on quite a bit of risk as what you've seen in the mining sector. I mean, the PGMs can be up anywhere between 5 to 10% on a particular day, depending on what the commodity prices are doing, or on the opposite side, they could be down 5 to 10%. So if you're uncertain in terms of taking a specific sector bet, the Satrix 40 is always one way of getting direct exposure into liquid shares on the SA market. Else, there's plenty of other offshore opportunities as well. FNB have also come out with exchange traded notes if you want specific exposure into offshore markets or even individual investments as well. It's going to come down to what exposure they typically would want to invest in.
Yeah, well, talking about offshore exposure in that ETF space, there's specifically a question for Euro Stocks 50 in the light of imminent rate cuts by the ECB. Yeah, and quite interesting that the rate cutting cycle in Europe seems to be going in the opposite direction as what we are seeing in the Fed and South Africa. Euro Stocks 50?
So if you just compare what the Euros actually had Euro stocks have actually had quite a good year-to-date performance. They have been laggards against the US markets over the past couple of years. Part of the reason for that is just the amount of stimulus measures that we've seen come through in the US market, and you've got the high concentration of AI/Mag 7 shares being listed in that market, which were big drivers of our market. I think going forward now, it's quite clear that the Mag 7, you can't just look at that entire index as one grouping of shares. The performance is quite varied across the likes of like a Meta or a Google, or even like what we saw last night with Microsoft. So investors are being a bit more cautious around just blanket buying the NASDAQ or buying the Mag 7 right now. And they are looking for other value opportunities elsewhere in the world. So I think what the viewer is saying does actually make quite a bit of sense in terms of you already got this kicker coming through with the rate cutting cycle in play. And the valuation tends to support the Euro Stocks 50 versus something like an S&P or even a NASDAQ.
Chris, there's also one, I mean, we spoke about Orion and Copper 360 kind of exploration companies. Renen also kind of falling into that space, although we are seeing, you know, commercialization prospects there. Your view about Renen shares here? I know that this has been a stock that's kind of been polarizing. Is this one that you look at or that you've kind of skimmed through recently?
It is one that we pay attention to. I think on Renen, we are still waiting for full production to come through on the helium side. You know, there were issues with the helium cold box previously, and management have come up with an announcement to say that most of the challenges have now been fixed, but we are still waiting for final confirmation that helium is in full production, or how quick that ramp up is going to happen on the helium side. I mean, the other key variables around Renen is a conclusion around the strategic stake that has been bought by the BE consortium into the Virginia fields. Remember, that stake was previously going to be bought by the Central Energy Fund, but that fell apart, and now the BE consortium has come in for that 10%. And then the last leg on Renen is going to be around the US listing. You know, they changed the listing, they changed the secondary from Australia to a US listing now. And I think that's going to be another catalyst around actually finalizing that listing, being listed in the US, and then completing the financing package for phase 2, because the majority of the value in Renen is actually in that phase 2 project, which still needs to funding still needs to be secured on that part of it.
There's so much that we're all waiting for, so really just kind of still a lot of uncertainty there, and really quite interesting how the share has just taken a lot of pressure recently. Another share that took pressure, I think that was last year's Purple Group. Your guest's take on Purple Group, up 45% year to date. Seems like they're turning a corner there. Even in their last results, they swung from a loss to a profit.
Yeah, I mean, good turnaround Purple Group over there. I think a large chunk of that's also coming through from the improved trading that we're seeing via easy equities as well, which has been driving that turnaround story there. So I think over time, as we try and grow out the retail market, that should bode well for them in terms of just the commissions and stuff that will come through from easy equities. So yeah, keeping an eye on that one there.
All right. Well, let us get to your stock pick for today, Chris. What are you hanging your hat on?
So I'm going to link it to the Anglo's BHP transaction. The one stock that does look quite interesting to us is actually Amplats. So Amplats was sold off 10% yesterday. It has had a slight mini bounce today, up 1 to 2%. We think that a lot, obviously the big move down has not been linked to fundamentals of the company. They still have one of the strongest Platts assets in the world with Mogalakwena. And we think that we do see a better structure come through in any type of takeout from this point onwards to potentially lead to a re-rating on that Amplats share. The new management team is doing their best as well in terms of trying to either close unprofitable mines or dispose of equity stakes in some of the mines. So I think you're getting improvements coming from all measures coming through. Amplats is quite a big dividend payer in the past. We think that if they are unbundled from the Amplats, from the Anglo stable, you're likely to see potential for even decent share buybacks as well to kick in as management really looks at the capital allocation strategy and look at total shareholder returns. So that's my pick for today.
All right. Well, thank you so much for your time and for your insights and analysis today, Chris. Really appreciated. That was Chris Reddy from All Weather Capital.